Welcome to Alpha Insights. I'm Kristen. Today, we're digging into mixed signals from the cannabis sector with Tom, our market commentator. Remember, if you have questions as we go, you can ask us at stockalpha.ai. Markets were closed this Sunday. The last trading day was Friday, February 20th, and trading picks back up Monday, February 23rd. Tom, great to have you.
Thanks for having me, Kristen. Glad to be here.
All right, start big picture for listeners. What stood out this weekend?
So the real question here is whether demand is starting to cool. The big headline was Michigan's January numbers. Sales came in at $226.8 million, which is down about 8% from a year earlier and down about 16% versus December. And the medical channel really cratered. Medical sales fell by about 43% to roughly $400,000.
Wow, that medical number sounds dramatic. What does that mean for investors holding cannabis names?
It's a two-part signal. One, Michigan is a major adult use market, so a drop like that can pressure revenue expectations across multi-state operators and ETFs that track the space. Think AdvisorShares Pure US Cannabis ETF, Tilray, Curaleaf, Green Thumb, TrueLeaf. Two, it suggests either weaker consumer demand or shifting channel dynamics, maybe inventory swings, pricing, or changes in how customers are buying. I mean, when you look at the data, it's not automatically a company-level problem. But if a firm is heavily reliant on Michigan, that's a real risk to your thesis.
So is this a blip or a trend?
Short answer, we don't know yet. You need to watch the next state sales reports to see if January was an isolated month or the start of a trend. And look at company disclosures, geographic revenue splits, inventory levels, and guidance. If a business is mostly Michigan exposed and lacks a plan to make up the shortfall, consider trimming. If exposure is limited or management shows a clear offset strategy, this could be a buying opportunity after prices adjust.
Interesting.
Another regulatory development to flag, Rhode Island is debating how to award up to 20 new dispensary licenses, and regulators are talking about a lottery as early as May. That's potentially a near-term catalyst for regional operators and real estate plays, but the timing matters. If they move quickly, winners could see real upside. If there are delays, applicants and investors face a drawn-out wait.
Right. So Rhode Island could be a short-term mover for local names, but probably not a game changer for the big ETFs?
Exactly. Local operator stocks and landlord plays can react, but national ETFs and large multi-state operators typically need broader rollouts or meaningful earnings beats to sustain momentum.
There was also some color on cultivation and branding from trade coverage this weekend. What should listeners take from that?
Two threads stood out. First, equipment alone won't fix yield or quality problems. Execution and growing fundamentals do. Focus on metrics like yield per square foot and consistency, not just capital spending. Second, brands leaning into whole plant identity and heritage, think authenticity, not hype, can build loyalty and support margins over time. So operational discipline first, then targeted CapEx, and a long-term brand strategy to maintain pricing power.
So for growers, fix the basics before you buy shiny new gear.
Yeah, that's a good point. Buy equipment to support a proven process, not as a cure-all.
For investors who want actionable steps heading into Monday, what should they watch?
Look for a few concrete signals. State sales reports, especially follow-ups from Michigan to see if January was a one-off. An update on Rhode Island's licensing timeline and whether a May lottery is confirmed. Operational disclosures from cultivators, yield, inventory, and product mix. And upcoming earnings and guidance from big names like Tilray, Curaleaf, Green Thumb, and TrueLeaf, plus cannabis ETFs. Expect volatility around any license awards or earnings that explicitly cite demand trends.
Got it. Any quick portfolio rules of thumb?
Yes, be selective and size positions to reflect regulatory and demand uncertainty. If a company is heavily concentrated in Michigan, reassess. Prefer names with diversified state exposure, strong operational metrics, and clear brand differentiation. And keep cash handy for entry points if state reports or license news create dislocations.
Good framework. Thanks, Tom.
My pleasure.
Before we go, quick recap for listeners.
Sure.
Key takeaways?
1. Michigan's steep January sales drop is the near-term risk to revenue expectations. 2. Rhode Island licensing could be a catalyst for regional names, but timing and execution determine impact. 3. Operational discipline and proven cultivation fundamentals matter more than equipment, and brand authenticity supports long-run value.
Great. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for listening. And Tom, thanks again.
Thanks, Kristen.